Now, what I will do, I'll break it down for you first of all in terms of the price action here on gold. Now, we did mention this last week where it is very unusual to see gold just come back down to a round number such as 1200 and just find itself supported at that zone and reverse back. Normally, the markets don't behave, especially the precious metals, don't behave in that way where you would see a significant decline in price. It's been over 12% decline now since the US election. It is unusual where you would see a move down to that level and just suddenly reverse at a major zone like that. And you can see with that, we have broken through this level, was definitely expecting a breakdown of 1200. We're currently sitting at 1,184 US dollars per ounce on gold. You can see we've overshot the 50% Fibonacci correction as well here. So we have overdone it with this move to the downside. We've had a correction over 50%, and the next major zone which a lot of traders will be looking at is the 61.8 Fibonacci retracement level, which is where we take into account the lows going back to December 2015, the highs after Brexit this year. We've had a reasonable correction now following on from that, and there's still the potential for gold to break down slightly lower here before it starts to come into some support. Now, interestingly, we've now seen this correction go on for gold. As of this Friday, we will be up to 4 months that gold has been correcting, which puts it at the extreme zone of where you see a typical correction in a bull market. So it is a bit of a make or break level as we go into December. But with that said, we've got a lot coming up now as we do go into December. So next week, of course, next Friday, we've got the non-farm payrolls. And we have also a number of elections which will be coming up in Italy, Australia, the Netherlands, France, and Germany in the following months. Italians are going to be voting on December the 4th. We could certainly see some volatility in the markets. And with that, with some of the uncertainty that we could have over the month of December, I do expect more trading opportunities. Now, at the moment, we had the minutes of the FOMC, which were delivered on Wednesday this week. Ultimately, those minutes were again a bit more confirming for a potential interest rate hike in December. That is getting priced into the markets at the moment. We saw a very similar situation last year in December where we saw a correction on gold and silver and also the other metals as we moved towards the December FOMC statement where they did confirm that an interest rate hike was going forward. And with that, we saw essentially a lot of that move priced into the markets. And in fact, we saw a rally afterwards. We bottomed out in mid-December with the metals, and then we continued to get a double bottom right at the end of December. And then we rallied over 15% the following quarter. In fact, it was an over 2,000 point move over January and February from the lows. So this time of year is very interesting for the metals. It's not unusual to see a correction like this. It's not unusual to see a major level of support like the 1200 level get breached. What I'm interested in now is the potential for retracements around this level. Now, we're not at that point at the moment, but I suspect as we go into December, you will want to watch out for a move down to this 61.8 Fibonacci retracement level, some sort of shakeout at that level as well, and a reversal. And if we start to see a reversal, close above the previous day's high, a close above a positive close on a weekly basis, there is the potential certainly to look at a retracement trade here where we've got very overdone in the short term here for gold and looking for some sort of retracement higher here to take advantage of as we go into January as well. Now, it might be that we get this reversal. It could occur in mid-December. It could occur as we go into the beginning of January. The timing of this, we need to just wait, be patient, and looking out for this opportunity. Certainly on the long side at the moment, bulls who are in this market right now, if they've still got their long positions right now, will likely be positioning their stop loss and sweating slightly, moving the stop loss just under around the 1170 zone. If not, they might have already come out of this position. We have to remember this time of year, a lot of funds will be looking to bank profits if they've been holding longer term trades since the beginning of the year, where we saw a lot of funds come into the market over the month of January, pushing the price up significantly. We will start to see, especially investors who've been holding on to their position most of the year, they will certainly want to make sure that they're coming out with some profit between now and the end of December. And that's what we've seen, a lot of liquidation of positions here, causing this breakdown to the downside. But now I am mindful that we're going to get into an extreme oversold condition. So right now, just awaiting really to see where the next major levels gold and silver could possibly come down to before they get some sort of a snapback in price. If we see a slow and steady grind lower here, we'll be watching to see how that price structure develops as well. But